Welcome to the Value Builder Podcast, where we focus on real estate with a value-add mindset. Real strategies, real operators, real outcomes. Let's dive in.
All right, Value Builder community. Today, I interviewing an amazing guest, Michael Rebelo. He is a Gen Z who skipped college and went to real estate right away, which I think it's a very smart thing to do. But at the same time, we don't see it quite often. And he is very successful. He manages right now millions of square feet. And I just would like to get in his story. Where we're located right now?
I'm in Tucson, Arizona.
He is a 20 years old entrepreneur, and I would love to get in his stories. Welcome, Michael, to the show. Maybe we can start from your quick story from your humble beginnings. And I think I want to dive in, know how you jumped in real estate right away so quickly right out of the school. So please welcome to the show, Mike.
All right, Saul, thank you so much for this opportunity. I appreciate it. I love doing stuff like this. But a quick intro about me. My name is Michael Rebelo. I'm based in Tucson. I'm a 20-year-old entrepreneur who went the college path and chose entrepreneurship instead. What drives me to do that is to retire my mom. I want to retire her from the W-2 corporate fist. And I want to help other middle Americans like her to learn about multifamily, learn about it, invest in it so they can also build financial freedom and financial independence as well, because it's a very niche system. It's a very niche business. And it's definitely not talked about enough because everyone's doing the traditional playbook, the 401ks, the IRAs, go to school, go to college, get a job, retire someday and die. I don't believe in that anymore. It worked in the past. It's worked for many people, but I don't think today it works. So I just want to be the voice of awareness that there's more out there. So that's a little bit of my story.
That's awesome. So I know that you co-founded your company, EverForward Capital Partners, with your mom and grandmother, right? So whose idea was that? Were you at the helm of this, idea, or because granted, you're on the younger side, which is amazing, but I'm just trying to understand exactly how that. Can you unpack that for us?
Absolutely, that's a great question. In fact, I've never been asked the question before on a podcast, but it all started back in 2023. This is when Mom and I wanted to get into the business because little quick background. My mother found out that she wasn't getting the returns that she deserved through her CDs, and her 401 wasn't performing as well. Neither was her IRA. I mean, her parents, my grandparents' IRA was demolished during the 2008 crash. And, it was to the point where she felt like she was financially illiterate and she wasn't leaving a legacy for me. So we decided to take the helm, go full bore, and to figure out where we can place our money. Eventually, it all led us to multifamily. I did a little bit of wholesaling. I did a little bit of the stock market. None of that was scalable or performed to the way I had envisioned it would, and we just dived into multifamily because we know we could scale. We could use OPM, other people's money, and just buy these apartment complexes, which was amazing to me. But when it came to building the company, it was actually quite difficult because we were trying to figure out, okay, what do we figure out for a name? What do we figure out for a logo? Like all these little things were just so complicated, and it doesn't have to be. I would figure like underwriting the financials would be more complicated, but this is worse. November of 2023, we founded our company, EverForward Capital Partners. But how do we even get that name? Like, how does this even formulate? So at the time, I was a minor. I was 17, and I was just still in high school. So I really couldn't sign officially on the LLC and the holding company that we had. So my mother had to be the custodian. So she has 60% ownership. I have 40%. That was the closest we could do because we wanted to be business partners. We didn't want to have like a boss and then an employee. We just wanted to be just unison. Essentially. So we were trying to figure out, how could we come up with a company name that really resonated with us because we didn't want to do something generic. And we're Portuguese. We're Portuguese descent. We have this one particular phrase, sempre à frente, which basically translates into English, ever forward, always forward, keep your head up. Doesn't matter. Don't look back. Just keep moving forward. And we didn't want to put sempre à frente Capital Partners because that would be very much a tongue twister for those that don't understand it or don't speak the language. So we translated it, and we found out that ever forward was the best thing because that was like our mantra, our story. It didn't matter if there was, something happens or if something, there's a roadblock, ever forward. Keep your head up, keep moving forward because the mission's still there. It doesn't matter whether it's a rainy or a sunny day. The mission's still there, so just keep going for it. It doesn't matter if you're sad or happy. Keep going for it. The mission doesn't change. You change. So just move ever forward. So when we came up with that company name, it was like, yeah, we resonate with this. And that was figuring out the logo and everything. But
it's powerful statement. And yeah, there's always a sunrise. So there is same as seeing a glass full or glass empty, right? There is always sunrise. That's very powerful name, I believe. Amazing. Yeah, well, 17 years old and you started the company and skipped right. But you said you started slightly in wholesaling and housing, and but very quickly you leaned right away to multifamily, which is commercial real estate.
absolutely. So to kind of dive into that a little bit, when my mother came to me at the table and said, like, hey, we're not performing as we should financially. So I'm like, okay. In high school at the time during my junior year, I was learning about the S&P 500, how to invest, and we were using like the stock market game. It's a website where you can simulate investing in stocks and day trading. So I was like, I'm familiar with this. Let me just take a shot at it. So we pulled a little bit of resources together, and I started to day trade back and forth. I was loving it at first, but a couple of months in, I was like, this isn't going to work because I got my eyes glued to Schwab Network, to Yahoo Finance, to Bloomberg. And from market open to market close, it was like, I can't keep up with this. I can't scale it because it's just me and then me doing this. And my returns were
And can you
terrible.
speak to that? So you couldn't keep up with it because there was information overload, or just because you realized that you don't have enough capital to make it scalable? Which one was which?
Honestly, it was a little bit of both. It was like the perfect storm. And with the analysis paralysis that I had no mentor. So I was just going this full head on, had no idea what I was doing. I was just looking at the ticker symbols in the stock market to see what is bullish and bearish and, trying to predict this. And I was all over the place. I was disorganized and I didn't have the resources to scale. So it was just like a hobby almost. It wasn't an actual scalable business. And then afterward, we tried a little bit of multifamily, didn't really get a lot of traction there. Tried wholesaling a little bit, tried cold calling, tried a little bit disposition.
Mm-hmm.
Didn't really get anywhere with that because the housing market was starting to decline a little bit.
Mm-hmm.
So we were like, all right, back to multifamily we go. Back to the tried and true.
Mm-hmm.
Tried a little bit, a couple of things, but multifamily was that keystone that we always leaned against.
So multifamily, was there a pivotal moment where you figured out that actually it's working? Was the mentor? What was the thing that actually you realized that actually was going to be the path?
That's a great question. So it started, I want to say a year ago.
Mm-hmm.
And we were funding the company, we were funding the LLC and everything. And there was to a point where we were actually going to shut down the company because we weren't getting any cash flow or any equity coming in. So we're like, I don't know what to do with this. So we
Mm-hmm.
were like, listen, we need to fulfill our goals and fulfill our why. We need to dive in head first. So I did. I started to look at deals. I started to raise some capital. I tried to figure out where I need to align myself in this business. It was with capital raising. We got offered a position on 152 units in Tyler, Texas, with an incredible team. We couldn't passive invest, but we figured, maybe we could bring some capital to the table and maybe help with some of the asset management. So we're helping to co-manage those 152 units. We're not a full GP, but we're still able to help.
Mm-hmm.
And that was our foot in the door for us to learn and to grow with this particular team and this property. And then all of a sudden, more deals started to come through, more opportunities started to appear. Like, for example, yesterday we just closed on 64 units in Tulsa, Oklahoma, and which was great.
Congratulations.
And now I'm looking at more deals out here locally in Tucson and also across the country in Tulsa and other submarkets. And it's like the law of the first deal. It's like the first one's always the hardest. And then we realized that looking at other people, listening to other people, talking to other mentors and operators, that it is possible. You just have to work a little bit more, work a little bit
Mm-hmm.
harder, talk to more investors, keep refining your systems. And when we start to rinse and repeat those methods, it's like everything started to unfold. Everything started to like compound interest. It was like a domino effect, snowball effect. And we figured out, hey, we can do this. Like it's actually real. It's not a fallacy. So yeah, it was like one of those moments of realization where when we started to put pen to paper and really started to put the true, honest action, things were starting to come to fruition. So it was like many little pivotal moments that created a big pivotal moment.
Makes sense. Makes sense. Now, do you mind going a little bit tactical? So, which path do you think you're leaning towards, or do you find your skill set might be, um, perform the best? Or typically, when you're talking about deal, it's typically a deal that is money and there is execution, right? And those are very very important pieces of making the project happen. and some people are more skilled in that. Some people are. Where do you think you fall in from those three?
Of that. So in the beginning, my fatal mistake was trying to be chief cook and bottle washer. I was trying to do all of those things,
Yeah.
and I was getting nowhere quickly. So I actually had to talk to a couple of operators and friends out here in Phoenix to figure out, hey, where'd you see me fitting in a deal? And they're like, listen, you love to go on podcasts, you love to, make content, you love to go to networking events. You need to be a capital raiser and investor relations manager. And I'm like,
Mm-hmm.
I don't know how to do that. And they're like, well, you better start learning quick. And I did. And my mother and I, we became the accidental capital raisers. Like, we didn't know what we're doing, but once we started to learn this method and learn these little niche steps for capital raising, we started to excel in it. And I always thought I wanted to do acquisitions and negotiation process, find the deals, because I love to dig. I'm as stubborn as they get. I'll find that deal. Just tell me where, and I'll go look for it. But the thing that gave us the most quote-unquote success and return on investment was the fact of capital raising. So I'm the one that brings the money. I'm the one that talks to the investors. I'm the one that finds the investors to fund the underwriting. I tried to learn underwriting, but Saul, I'm going to be honest with you, I can't underwrite to save my life. So it's like, all right, you know what? Listen, I'm going to bring the money to make the underwriting come to life.
That makes sense.
And
That makes sense.
that's how I found out that's where my expertise lies, is to talk to the investors, be the people person, and to bring the money into the deal and just present opportunities.
So now you are all in 1 year. You are started for like 3 years, and you have some success. Do you mind sharing some numbers, if you wish, on what actually you accomplished in that 1 year? Maybe doors or cash flow, or your how much money you made. Or if there is like a KPI you can share.
That is a great question. I love that.
Yeah.
But for KPI, I don't know off the top of my head. I wish I do. I wish I did. Excuse me. I have a GP that handles all that for us on this 152 unit deal, but it was quite the hefty payout for our investors, which makes me happy because that's exactly what I want to do. But between the 152 units that we co-manage and the 64 units that we're general partnering on, it's about a $15 million portfolio right now that we're on, quote unquote. And for the amount of capital raised, which was astonishing to me, Mom and I collectively have raised between soft commits and committed capital over $1 million in private capital, and which was incredible to me. So it was like putting those figures to paper, and it's like, wow, I'm 20 and my mom, like, we're doing this together. It's like, wow, we can do this. And then I'm looking at yet another property, yet another portfolio to start purchasing either before Christmas time, which I don't know if I can do that, but hell, I'll try, or even before the second quarter of 2026. But to look at those numbers, and it's like, wow, we did that. Like, we're part of that. We're part of these amazing teams in order to back that up. It's like, it's just incredible. Those are figures I'm able to share at this current moment of, like, who we are.
That's
numbers
incredible.
wise. Yeah.
And that's incredible. 20 years old, that's really incredible. I'm just picturing myself where I was, 20 years old, and most of the commercial real estate investors that are 20 years old, not too many have this early start. So actually, let's dive in a little bit deeper here. I think your generation, I see the tendency that people don't want to skip college. There's not so much important to be in college. I tend to agree with that. I have kids a little younger than you, and they see the notion of what they're communicating. And another thing is that for whatever reason, I think real estate is not that sexy for your generation. They see crypto and AI is definitely very, very attractive. So maybe you can speak to that, let's say, from looking from your friends. Is that really a big trend that people will stop going to college? I think I read somewhere there's probably a drop like 10 or 15% compared to 10 years ago. But from your surroundings, do you see that people are really skipping the college, going right away to the workforce, entrepreneurship? What do you see in your circle? Every week, I read hundreds of commercial real estate articles from across the U.S. and around the world. I connect the signals, break down the Fed moves, and share real case studies, not theory, from my 2 decades of real estate experience and actively doing deals right now. My team and I spend 15 plus hours on a weekly basis and deliver this to you for free. You can read it in 5 minutes. So every Sunday at 9:07 a.m., you'll get major commercial real estate news that matters, one Fed insights that matters, one deep dive case study from me or one of our operators who already made the mistakes, so you don't have to. thousands of commercial real estate operators and investors read this newsletter, especially in the value add space. And don't take my word for it. Check out hundreds of reader testimonials online. Plus, when you subscribe, you get instant access to a Proforma underwriting tool, the same one we use every single day to underwrite value add deals. Now, this is not for you if you're looking to get rich quick schemes, or if you're looking for theory and hallucinations, not real numbers, or you're not serious about commercial real estate. But if you want real tactics, real deals, real results, no bait and switch, go to joinvaluebuilder.com and subscribe for free. And see you there, guys.
It's a great question, Saul. I'm a big advocate with the subject. I wanted to go to college. Actually, rewind 5 years ago, I wanted to be a nuclear engineer because I was so engrossed with atomic studies, nuclear fission, physics. I loved all that stuff. Then I realized I had to go to college for 14 years. No, not happening. I'm like, I'm not getting that amount of time back. Besides that was a little, aside there. For college, yes, I agree. I think that numbers are dropping. I think they're going to continue dropping because I think a lot of people are going to the trades and are probably just looking for internships and mentors to study under. And I'm not saying that college is bad. I'm saying college is bad if you want to do something like, become a professional cook or to go into finance. I think that is the worst possible thing you could do because there's people out there that you can mentor under. You can mentor under me. I have some friends that are mentoring under me to get into this business because they want to start their own business. They want to do marketing or finance or something along that lines and to be an owner, not an employee. The school system teaches people to be employees, not entrepreneurs. And this country was founded on entrepreneurs and still is to this day. Everything we use was by a crazy idea. I mean, look at Henry Ford. He started the Model T, and now you see Fords everywhere. It's like just crazy idea, another entrepreneur. But anyway, if you're going to college to be a doctor, an engineer, or something where it requires a high caliber degree, I absolutely agree. Because I don't want to be laying on the surgical table and I'm looking over and you're on YouTube on how to do brain surgery. I don't want that. I want a degree to back that up. But if you're going to college for finance or something that doesn't require 4 to 5 years of your time, and never mind the student debt that follows with it, find a mentor or a company that you can intern under and learn. The best way to do real estate or anything is by actually doing it, not by sitting in a lecture hall and listening in. I'll give you an example. Like in school, for me, in high school, I was learning entrepreneurship and finance and personal finance, business finance. And when I started to do this business, I learned more by doing than actually sitting there and taking notes. And I think that's crucial. A lot of my friends are starting to go into the trades, maybe not like blue collar trades, but like, strict internships because they feel like that they don't want to be $80,000 in debt, in student debt for Lord knows how many years. I'd rather have the debt to leverage to buy multifamily properties. That's the kind of debt I want to use. Kind of like Robert Kiyosaki, for example. He uses the good debt to get it from the banks, buy these houses for the cash flow, and then those houses pay him. He's not working for the dollar. When we're going to college, we're still working for the dollar. And I don't want to do that, especially since it's dropped 99% in value. I don't think so. I want those properties to start paying me. And it's like, now I'm trying to teach as many people as I can, whether it's middle Americans or my generation, to say like, hey, there's ways you could do this. And I think it's starting to open some eyes. And then I'll wrap it up with this last note. I think the numbers are dropping because, one, I think my generation is lazy. I think that's pretty much it. They don't want to work. They want, this handed to them on a silver platter. I understand hard work. And there's like a very selective handful of my generation that understands hard work. But there's also the flip side. I think they're also realizing that there's other ways than just going to college or learning and spending all this money, that there's other ways that they can also learn, or maybe even get a job and then later they want to do studies and then they can just save up for an apartment, save up for a car, start their life the way they want to. So I think they're starting to realize that college isn't the only option.
Makes sense. If we stay on this topic, so do you think the educational system will transform or adapt to this, or do you think more or less will completely evolve in something different, that probably like institutional education will disappear eventually? What do you think?
Ooh, I love that question. I don't think it's going to change anytime soon. I think it's going to take a several amount of years for it to start adapting to new things. I mean, I'll give you an example. When the pandemic happened, they had a lot of remote learning, and Zoom and Google Meet started to become a pretty much everyday thing. I mean, you had computers and laptops and televisions and everything where they're starting to adapt. But I feel like the actual education system overall, I don't think it's going to change. I think it's going to adapt slightly to different changes where it's like, more people go into trades and more people are, going outside of the college route. I don't think it's going to change dramatically, but I think there's going to be subtle changes that are going to come in the next 2 to 7 years. I think the 7 year mark where I think they're going to be like, listen, we need to start making some changes, especially since we get older and then eventually when we start having children and then they go off to school, even elementary, preschool, or middle school, it doesn't matter. I feel like there's going to be a, a societal shift when it comes to the education system. When? I don't know. How? I don't know. I feel like it's not going to change overnight. I feel like it's just going to be these little details that are eventually going to add up eventually to start accommodating to these trends, like going to trades, or there's a lesser amount of people signing up for college courses or just college in general. So I think it's going to be a very slow change, very slow change.
Yeah, I think it's happening probably already right now, right? With the white
Yeah.
collar jobs and with robotics, probably is going to be another wave in 5 years. There's similar disruption with the trades, but
Hmm.
yeah, time will tell. But definitely is changing, 100%. Now, another question I want to ask about real estate, right? So same thing with your generation. For whatever reason, I feel real estate is not so attractive to your generation, folks. Let's say I don't see many folks jumping in at 20 years to do commercial real estate or be an operator for multifamily. It's not like there's none, but there are other more attractive opportunities. I see crypto, I see AI.
Hmm.
Is that what you see also in your circles, or maybe it's just I'm not surrounding with Gen Zs that much, or where is that in your circles? Do you see people want to get in real estate, or that's still actually that's old boys club kind of game, you know?
That's a really good question. I'll give you an example. When you open up Facebook Reels, Instagram Reels, or TikTok in general, if you just look at what my generation is doing, it's a lot of day trading, a lot of crypto. It's a lot of the electronical stuff where they can just do straight from their computer, where they can do it anywhere, anytime, where they, have a notification pop up on their phone from Fidelity or Schwab. It doesn't matter. But I think that's one, what they're used to, and number two, I think that's what they're most comfortable with. That, they can also learn a little bit from a mentor. They can learn a little bit, save up some cash, and do it on their own passively. And I think that's good. But when it comes to real estate, when they say like, hey, I'm doing commercial properties, the stigmatism behind commercial multifamily is that it's owned by BlackRock, Vanguard, and all these big companies that you can't touch. But when you start to get into these small circles with multifamily and realize that you can do something like a syndication or a joint venture, whether it's a Reg D or not, I mean, there's ways you could do it, like bring investors together, getting the loan, working with operators. I don't think they understand that. And maybe there is still a stigmatism that, you're right. It's like, the old boys club, like, oh, let's do real estate and everything. Let's go
Yep.
on the yacht and go golfing, whatever. But anyway, I feel like that real estate's not attractive to my generation because there's a lot of work and a lot of studying that's involved. Because I'll be honest with you, when I got out of high school, it's like, good, I don't have to study anymore. But then when I got into this industry, I have to study every day. Different
There's
trends,
mountain.
what's happening with the market, listen to Jerome Powell. What is he going to say next? Is the rates going to go up? Is it going to go down? Are we expecting a cut? Study what the new charts are for CoStar or Yardi Matrix, doesn't matter. So there's a lot of mental footwork that goes into multifamily. With the
Hmm.
stock market and trading, you could do like a little bit of a assumption there.
Hmm.
You can start day trading a little bit, but that doesn't require a lot of effort. Sure, you have to watch the ticker symbols, listen to the stock market news, but multifamily requires a lot of work. I mean, it's definitely not for the faint of heart. That's why the market's so niche and so small, because there's a lot of flashes in the pan. So I think that's why it's not attractive, where there's a lot of small things that require a lot of time and a lot of energy, but it's really how much you delegate and where your priorities lie when it comes to this business. So in essence, what I'm trying to say is the at-home comfort of the cryptocurrency and the stock market trading, day trading, is more favorable to my generation because one, they don't want to do anything extensive. They want to just put their money to work as easy as possible. Number two, real estate is owned by the big cats like
Hmm.
Vanguard and BlackRock. And number three, real estate is for those that are in their 50s, their 60s, their 40s, around that age range, because that's the rich way, quote unquote, when it's not actually for the ultra rich. It's actually for all of us. We just got to figure out who does that we can start partnering with.
Yep, that's awesome. Yeah, thank you. Thank you for sharing that. I would like to leave you with a question that I think inspire many listeners who also on a younger side. Where do you see yourself in 5 years? So you're right now going to be 25. We have this podcast in 2031. How do you see that? How do you see yourself in terms of portfolio? What do you do, or where are you at in real estate?
Love that question. So, um, I want to have enough cash. So, first of all, in about a year or a year and a half, I want to have enough cash flow where my mother doesn't have to work anymore or even think about the bills. That is what I want to have. That's year one, year two. Now, from 2 to 5, those years, I want to become a teacher. I want to
Mm,
become an advocate for my generation, also middle America, to say, like, hey, there's a way that you can do this. I don't want to be the person where they're selling, like, a massively priced course. I want to be on stage anywhere, anytime, just teaching people what I do, especially from a young age. I
mm-hmm,
also want to tell my generation that, hey, there's options for you out there, that you don't have to go to college and get fixed into this cookie cutter route that everyone's
mm-hmm,
been taking for the past 100 years. No, in fact, there's quite a bit of changing of the guard that comes to that. So I want to be a voice. I want to be an advocate out there for those that want to put their money to work, that don't want to be tied to Wall Street. They don't want to be tied to the education system.
mm-hmm.
They want something better for themselves, for their families, for their friends, and their future. Because I think there's so much that's changing in the next 5 years. I mean, Saul, let's be honest. You've got AI that's exploding. What's the next thing that's going to boom, right? So it's just trying to keep up with this and trying to teach as many people as I can before that window closes for me. Now, in terms of portfolio, I would like to own a lot out here in the state of Arizona. I love the state of Arizona, but I think portfolio wise, in the next 5 years, oh, that's a really good question. I at least want to be at 300 million in managed
Mm-hmm.
portfolio, and I think that's a steady number. I think now if I get more, Merry Christmas, Happy Hanukkah for me. But if that's okay, as long as I'm still closing deals and using that knowledge and those experiences, whether it's fails or wins, to teach other people about this that don't even know that this exists, I can rest my head at night and you know, say that I was able to help someone. I'll leave you with this story actually that my mother taught me. There's a gentleman walking on the shoreline. Beautiful day, and the waves are crashing on the shoreline. He sees in the distance there's another man. Now, before he even sees that, there's thousands of starfish lying across the seashore. And he goes over to this man. He's like, "What are you doing?" The man's picking up. He's throwing starfish back in the ocean. He's like, "You do realize you're going to be here all day. What difference are you going to make?" So the man bends down again, picks up a starfish, and throws it back into the ocean. He said, "I made a difference to that one." You may not be able to teach everybody, the entire populace of the United States, but as long as you can help someone achieve financial freedom or get them on that path, then you're fulfilling your mission, right? You're fulfilling your why, and that's my why. That's my mission, to retire my mom and to help others like her. So that's where I see
That's
myself in
amazing.
5 years.
That's amazing. I really, really appreciate for sharing that and inspiring. And this is so touching that you have this purpose. And I can't wait to see how far you're gonna go. And hopefully, we're gonna be we'll do a podcast in 2031, and we're gonna talk about your 1/3 billion or $500 million portfolio, and more importantly, how many people you inspired and show the way from to do things different way. So thank you
That's
very
right.
much. So with that, can you share with the audience if they want to invest with you, if they want to reach out to you, where can they find you?
Great question. So you could text or call me at 774-264-3392. That is my direct work cell. You can call or text anytime. Happy to share my knowledge, whatever, happy to get on a call. Or you can visit us at our website at www.everforwardcapitalpartners.com. It's kind of what the banner says over here. There's a contact page. You can see who we are, what our why is, what our portfolio is, who we partner with, what events we attend. I also have a free book on there that's PDF, just tells you the story and how we do things around here. So yeah, feel free to connect. Feel free to follow me on social media. I do have social media on my website as well. So looking forward to connect.
Awesome. Amazing, Mike. Thank you very much. Looking forward to do another podcast, and good luck with all you do, man. Appreciate it.
Likewise, Saul. Thank you so much. I appreciate it.
You've been listening to the Value Builder Podcast. For more strategies, stories, and episodes, head to valuebuilder.co or subscribe on your favorite app. Always make it better than you found it and keep adding value. See you in the next one.